All right then, good afternoon everyone as we head towards a fresh week of trading on Monday the 30th of October. We're going to have a look through the economic calendar on a pretty action-packed week across the economic docket this week. Now slightly changed times specifically for the US data out over the course of this week. The clocks went back in the UK over the weekend, which means there's a week or two now where the timings are a little bit messed up. So we got to remember cash open for the US is at 1:30 London time for the duration of this week, which means Fed on Wednesday, 6 o'clock, manufacturing PMIs, 2 o'clock, comes around the non-farm payrolls, then on Friday, which will be 12:30. So something we have to remember, it's not like it normally is with data at 3 o'clock, 1:30, and then the Fed at 7 o'clock in the evening. So slight bit different, and obviously cash open at 1:30, which we will keep an eye on a raft of, or on a week, should I say, where there is a raft of central bank policy decisions, the second last of the year for the majority of the central banks. But we'll start today where we have had some German data, GDP figures. Now obviously GDP is a backward looking indicator, but I mean negative contraction is still below zero, but slightly above consensus, so not as bad as first feared, but obviously not great at all by any stretch of the imagination. I mean, minus 0.1 still is contraction over the third quarter, so not good for Europe's largest economy today. We've not seen too much price action off the back of it. Euro has had a bit of a pop higher, but stocks haven't done too much in today's session so far. CPI out of Germany, year-over-year figure below consensus, below previous, so more progress made on inflation. But is that progress being made on inflation because of a stalling economy? It's not really the way you'd want to get inflation down, and not what the central banks are hoping for. So not much of a need for the central bank to go hike rates any further. They are done. They've said that they are open to still potentially hiking again, but interest rates are at a sufficiently restrictive level to return inflation back to their target if maintained for long enough, which is what they said last week. But do they go and hike again? I would be pretty sure that they will not. But start the central bank decisions. We've got the BOJ. Now, a lot of chatter from market participants over the last number of weeks and months as will they or won't they tweak policy? Will they allow interest rates to rise further? And I think a big question when it comes around to tomorrow is, will they allow the upper band of their 10-year yield, their yield curve control policy? Will they allow that to raise further past 1%? They have had to step in a few times over the last few weeks and months in order to keep yields suppressed. They're allowing it to reach to the top of the range of the one, or they're allowing it to reach up to 1%. Do they increase that further, allow to 1.5 or something like that, in order to allow interest rates to rise steadily without actually raising their base rate? I'll have to see, but chatter with the Bank of Japan. Do they adjust policy settings tomorrow? You've seen a bit of a pullback in dollar yen, which is a bit of a move lower in dollar yen, which is a bit of a move higher in the Japanese yen. We are back below 150, so no need for intervention just yet. Not really any above that. We've managed to go back below it. Do we see any further adjustments from them? They won't want to. They've got the highest levels of debt to GDP globally, so if they allow interest rates to go further within their economy, that causes widespread implications across their economy. So they won't want to really adjust it too much, but ultimately central banks around the world are have got interest rates where they are at, and if there's a complete reluctance to do anything to adjust monetary policy, it will probably be seen as another negative for the Japanese yen. Dollar yen may potentially come up higher than that. So in order for them to stem losses or continue to stem losses on the Japanese yen, you think they'd at least have to talk a good game in tomorrow's interest rate decision. We get GDP figures for the Eurozone as a whole. The German economy struggling today. France, Italy, GDP figures out tomorrow. The Eurozone as a whole figures tomorrow. Consensus for 0%. Do we get a contraction, or does growth remain positive within the Eurozone tomorrow? We'll have to wait and see. Obviously, Europe will want to try and avoid the technical recession as much as they can, but the economic data points towards a poorly performing economy, whichever way you try and spin it. You do have some inflation figures from Europe tomorrow at 10 a.m. Consensus 3.1, down from 4.3. So inflation returning back to their 2% target, which is what they want. Is that going to come in the form of a recession? It's kind of what they'd want to avoid, but ultimately, the situation they are in, they are pretty powerless to stop that. We are also heading into winter, which which is a bit of a troubling thing for the European economy. Obviously, gas prices are higher than they were a couple of years ago. They were extremely reliant on Russian gas and Russian oil. They've had to try and replace that as best they can. They won't want to make friends with Russia again, but I think certainly the winter within these economies, with there being a lack of supply of gas around Europe, with people needing it now that we're coming into winter, again, that may pose a bit more of a threat to the European economy. So certainly not good throughout Europe. Growth weak, inflation coming down, which is what they want, but in terms of central banks cutting interest rates, I hazard a guess the ECB may be one of the first to look at that come next year. Apart from that, then into Wednesday, we've got the manufacturing PMI on Wednesday, got some job openings figures on Wednesday as well. We'll come around to the ADP employment tomorrow, which we will keep an eye on. But Fed on Wednesday, 6 o'clock, not expected to hike interest rates again. You can see the 10-year yield where it is at. If we have a look at this, it is towards the highs of this range, continues to trade towards the highs of this range and chop sideways with the 10-year yield up to 5%. That black line there, as you can see, was the highest point since 2007, with the 10-year yield being a basis for a lot of interest rates set throughout the US economy, namely US mortgages. With that being up where it is, it may potentially do the Fed's job for us. So they won't want to hike interest rates, especially if yields are up where they are. They continue to remain buoyant up there close to that 5% level. It reduces the need for them to actually hike interest rates, as those yields can do their job for them without them having to act. So I imagine the Fed's a little bit of a non-event tomorrow, not going to hike interest rates. They'll probably be happy with where yields are at. Maybe not happy, but they will be accepting of it to not have to adjust policy settings further themselves. They will probably stick to some sort of script that they will hike interest rates again if necessarily. But do they come out and say what the ECB have said over the last couple of meetings? I mean, the ECB have suggested that interest rates are at a sufficiently restrictive level in order to return inflation back to 2%. Do the Fed go down that route? Do they say that the Feds are at a sufficiently restrictive level if interest rates are held for long enough? That's likely to be negative for the US dollar, negative for yields, probably positive for stocks. But you see growth 4.9% over Q3. That is not really it's not really a situation where you would expect the Fed to just completely cool off. Inflation still a little bit higher than they would want it at the moment. Not likely to say they are finished. I would personally imagine they're not likely to suggest that they are finished with interest rate hikes. There's a possibility they go down that route, but for me, I think they'll probably stick to the script. Incoming data, or data dependent going forward, incoming economic data will suggest the path that rates will take. Probably continue to leave the door open to a future rate hike, but also give themselves the possibility to shut that door if needs be. So I'm not so sure the Fed will be much of an event at 6 o'clock on Wednesday. On to the Bank of England then. Bank of England, the Thursday at midday. Anything not US related is fine for us to trade normal times, but the Bank of England will be midday on Thursday, where they did not hike interest rates, or they said at their last meeting, you can see they held firm with interest rates at their last meeting. They did not go and hike again, and they were not too kind of confirming, a little bit vague as to whether they would continue to hike interest rates. Markets a little bit unsure, but there was a bit of a surprise in the last release. Some of the votes came in that they were not looking to hike interest rates more than what had been anticipated, to say no hike at their next or at that current meeting. We'll have to wait and see how the votes come about this time. Let me go back, just get the medium impact on, and we'll go back to Thursday and have a look. You can see 4 out of 9 voted for a hike, 5 out of 9 voted to remain unchanged. We're expected another kind of more dovish turn, if we want to call it that, with 3 out of 9 voting for a hike, only 6 out of 9 voting for it to be unchanged. Do we come in above that in the unchanged? Do we go up to 7 or 8, get a sort of more unanimous decision to not hike interest rates anymore? You're not likely to see anything that says cut, but do we get more of the voting members decide that hiking again is not a good idea? So no interest rate hikes from the Bank of England on Thursday. Do we get a bit of surprise on the votes? Obviously that remains to be seen, and we will keep an eye on that at 12. But no 12 on Thursday, should I say. No interest rate hikes to come from the Bank of England. Do they come out and say that they are finished? Probably won't want to, but I'd imagine that they probably are, which is not what markets were first anticipating. Some market participants thought the Bank of England would get up towards 7%. We're not likely to see that. In my opinion, we're probably not likely to see them above 5.25 at all. On to Friday then, non-farm payrolls, the latest jobs report from the US, expected to be relatively subdued at 180,000. The unemployment rate did tick up, even with a positive or a strong NFP print last month. Unemployment rate expected to remain stable at 3.8%. Again, that's just fresh economic data, or fresh data to give you some sort of a surprise from Friday. We'll have to see with the Fed. We can't really make too much of an assumption as to what may happen off the back of that. Now we'll wait to see what the Fed have to say for themselves on Wednesday, and then we'll await the incoming economic data on at 12:30 on Friday. Economic data out of the US continues to be robust, continues to be extremely strong. Certainly does not point towards any sort of a recession just yet in the US economy. That economy continues to truck on forward. Does that have a positive impact on the unemployment rate? Certainly the Fed need to keep the foot on the gas all they can. I'm maybe not sure about press ahead, but certainly they cannot afford to take their foot off the gas, shall we say, when it comes around to Wednesday. Economic data on Friday might shift some thinking. But a couple of things we need to think about over the course of this week. For now, it's hard to kind of pinpoint some direction. We've got a raft of central banks out that will shift markets about. Do we get a policy adjustment from the BOJ? Do the Fed surprise us on Wednesday? The Bank of England, do they take a little bit more of a dovish step? But the Fed, you'd have to imagine then currency way of thinking about things. You'd have to imagine that the Fed probably talk a better game than the Bank of England. So cable downside probably would make sense this week. Bank of Japan, are they likely to adjust policy? They probably won't want to, but I do think a punt on some dollar yen shorts or any yen longs might be worth it over the course of this week. Selling some sterling yen, if I was a betting man, which is exactly what I am, take a punt on some sterling yen shorts over the course of this week. You can get a wide stop loss on for yourself. Not necessarily pick a level or anything like that, but to me personally, I'd be somewhat surprised if sterling yen was not lower come the end of the week. So Bank of Japan, likely that you'd have to imagine they talk a good game on Tuesday morning. Have to imagine that the Bank of England probably take somewhat more of a dovish step. The Fed could be anyone's guess on Wednesday. They're unlikely to take the foot off the gas. Will they want to press ahead? Not so sure. They will probably be data dependent, leave the door open. Bank of Japan though, certainly one to watch in the overnight session tonight.